What's top of mind when it comes to clients, when it comes to investors? What do you think will be the sort of overarching theme for the next 2 days?
Yeah, sure. I've just hosted the opening session with Nathan Sheets, our global chief economist, and that's followed by Candy Wolf, and I think that probably summarises the key things for investors here at this conference is the world economy, geopolitics, and then more locally we've had substantial interest in things like the real estate sector. But as we lead into this US election, I think investors have a lot of questions in mind.
Probably a lot of questions about China too, particularly with the Australia proxy angle of how, fortuitously or not, that exposure is.
Yeah, that's right. And I think the investor base has been somewhat frustrated by the lack of clarity in terms of the stimulus package coming out of China, and that remains a key question for investors. Our chief economist from China is also here, providing insights. It'll be interesting to see over the clarity over probably the next month, I would think, in terms of what that fiscal package might look like.
It's interesting because, of course, we're talking at a time we will see yet another record high for US stocks, and it feels like this sort of desire to rally higher comes even with all of the tensions and risks that you talk about going into November US election, what's going on in the Middle East, the uncertainty over China. Do you think Australia and the clients that you have here feel sort of somewhat buffered by our position and the nature of this market?
I'm not sure whether we feel somewhat buffered. I think when you see risk enter global markets, I think Australia reacts to that risk. I think your original point is an interesting one. We have had a substantial increase in geopolitical tensions. We've had, really, if you look back over the last couple of years, substantial tightening in monetary policy, and only recently has that reversed. And yet, as you say, equity markets are at all-time highs. Sectors such as technology and financials have been key drivers in the US. And even last night we saw even substantial move in stocks like Nvidia. And I think that sort of speaks to a couple of things. One is the innovation piece, but also I think consumers have been more resilient than what people probably anticipated. And this is one of the things that Nathan spoke about, is that we do see consumers changing their behaviour around the value chain of what they might consume, but the aggregate still remains stronger than what we probably anticipated.
Sort of adjacent to that, I do wonder about your strategy when it comes to the wealth side of the business. Is that something that you're sort of actively pursuing, or where do you see the growth drivers as part of the bigger turnaround plan for Jane
if we look at it from a global perspective, Andy Sieg joined Citi 12 months ago following Jane's announcement. He's got significant plans for wealth, and you can see the deployment of private capital is significant in the last 12 months, and that feeds through just from startups all the way through to really the largest deal that has been done this year, which was the Blackstone air trunk deal, which we advised on. So the power of private capital, I think, is probably as strong as ever.
Of course, Australian, your business is so well positioned in the energy sector. I wonder how much of that is really coming through in your business, global capital, when it comes to really attracting global capital in the energy sector, and even maybe other sectors like housing, where we know that Australia has a shortage problem.
Yeah, the energy sector is interesting. It's almost a little bit like the energy transition has taken a back seat in the media, but it certainly hasn't taken a back seat in terms of our investors. But I think what that speaks to is that it's a very long-term game. And we're probably seeing the debate around the energy transition balance out a little bit. I think initially it was something that was seen as something that was going to be of speed and happen quite quickly. And I think the reality is that this is a very long-term game, but we're still seeing offshore interest in that energy transition story, mainly because it's one of the things in Australia that has genuine scale in terms of returns. So, we would expect that to continue. In terms of housing, real estate's an interesting sector. As I said earlier, we've had substantial interest in the real estate sector, in this conference. In fact, 5 of our top 6 most in-demand companies here at the conference are from the real estate sector. And I think that speaks to the fact that what we've seen in the past, as soon as monetary policy starts to shift, as soon as we start to move towards that first easing bias, we do see a pickup in this sector, and we expect that to continue.
Does that mean that you expect your Australia business to grow in the global context for Citi? We heard that Citi has been hiring as well for the broader Asia markets business. I wonder if it's going to touch any of your divisions as well.
Oh, that's certainly my ambition. And my ambition is significant. So we see Australia as a growth market, and through various sectors of our business. So all of our sectors this year have been on a growth path. So we've got a significant banking division, significant services division, which speaks to that technology innovation, through either the payments channels or through our custody business, and then we've got global markets. And I think you see the strength of the equity markets, you see the intermittent volatility in markets, and that our clients are relying on us to deliver insights around that. So I think Australia is very well positioned. If you look at it even in a regional context, we're a country that is growing GDP wise. We've got a fiscal position that remains very strong, and geopolitically, we can benefit from tensions in other parts of the world.
I wanted to ask you about the outlook. What does the pipeline look like when it comes to banking volumes? There's obviously been a very nice recovery across Asia, but also for deals.
Yeah, that's right. I think M&A outlook remains quite strong. We're seeing, even in the last 6 weeks, an increase in that activity, and I think that's really driven by, firstly, more confidence that at least interest rates aren't going up.
Right.
So we expect an easing by the RBA in February. That might be pushed out to May because of the resilience of the economy. But I think that confidence around the glide path of rates is really bringing bid and offer spreads together in terms of deal making. So I expect that. IPO markets are still challenged. I think we have to acknowledge that, but I think the overall banking activity remains very strong.